Coming up in the month of September, it looks like the Federal Reserve will be cutting the federal funds rate. So today I want to answer the question, how does the Federal Reserve impact mortgage interest rates? I think this article behind me does a pretty good job of explaining the federal funds rate and its relationship to mortgage interest rates. Again, it says right here, while this rate isn't the same as the rate as you'll pay on your mortgage, it does have a relationship to how banks set their mortgage interest rates during the time that you're going to be shopping for a home. So if the Federal Reserve doesn't directly impact mortgage interest rates, what does impact mortgage interest rates, and how does the Federal Reserve decide to increase or decrease the federal funds rate? Well, the biggest one here is supply and demand of mortgage-backed securities. Mortgage-backed securities are what directly impacts the mortgage interest rates that are set by mortgage lenders across the country. Okay, if you've seen a movie like The Big Short, the bulk of that movie was directly tied to mortgage-backed securities. Okay, the other piece here is inflation. That top number there. One of the biggest things that the Federal Reserve in their dual mandate has stated is that they are trying to keep inflation low, but also keep unemployment stable. So as we look at the Federal Reserve and how they've acted over the course of the past couple of years, how has mortgage interest rates reacted to the Federal Reserve moving up and down in terms of the federal funds rate? Behind me, you see a graph of the federal funds rate, which has varied from nearly 0% during the COVID years all the way up to a fairly high rate of 5% in 2022 and 2023. I specifically wanted to point out this date. This is September 25th, when mortgage interest rates were around 6.25%. Okay. On September 18th of 2024 is when the Federal Reserve started cutting the federal funds rate last year. They lowered the federal funds rate by nearly 1 percentage point over the course of the fall portion of 2024. How did mortgage interest rates react? Well, mortgage interest rates, in fact, went up over the course of 2024. So what I want to point out here is that the Federal Reserve does not directly mean that mortgage interest rates are going to increase or decrease based upon their actions. In fact, a lot of the times, the market for mortgage interest rates will move ahead of the Federal Reserve. Okay, so as we get closer to the Federal Reserve cutting the federal funds rate in September of 2025, what should you anticipate? You should anticipate the mortgage market having probably already made a move towards lower interest rates, or that's going to set us up for an extremely busy fall as mortgage interest rates do react and do move lower. Only time will tell.